Hi, I'm Jim Stevens from Softion. In this week's Logistics Insights podcast, slowing e-commerce growth and whether it will impact investment in technology. We'll be back to discuss this important topic in just a few seconds.
This podcast is brought to you by Softion, providing innovative solutions for warehouse management, warehouse execution, and distributed order management. Softion, delivering supply chain success every time.
Interest in distribution automation is very high, driven by the continued issues nationwide in terms of labor shortages and costs. But in retail, consumer goods, and some other operations, those high labor costs have been closely connected to the rise in e-fulfillment. Picking and packing e-commerce orders for individual customers is a labor-intensive and costly process for most. For example, at the recent ProMat trade show, mobile robot vendors that support such piece-picking processes saw very high numbers of show attendees crowding into their booths. Interest in WMS and other software to support such automation was also high. But interestingly, as ProMat was ending its 4-day run, came this surprising news. Walmart is laying off hundreds of employees at e-commerce fulfillment centers across the country. As first reported by the Reuters news service, Walmart confirmed that it is eliminating hundreds of jobs at 5 fulfillment centers in various states. It told Reuters it was reducing its workforce because of a reduction or elimination in evening and weekend shifts. So, what exactly is going on here? In part, it certainly appears that we've hit an e-commerce ceiling. In Walmart's case, e-commerce sales rose 12% in the most recent fiscal year, which ended January 31st. That compares with 11% growth in fiscal 2022, but 79% in fiscal 2021, when COVID changed market dynamics and sent e-commerce sales skyrocketing. Here are some other data points. February parcel volumes were actually down in the mid-single digits compared with a year earlier, according to ShipMatrix, which analyzes parcel shipping data. 16,900 U.S. jobs at trucking, warehousing, and parcel delivery companies were cut in February, with a slowdown in e-commerce being cited as a key factor. Somewhat buried in its Q4 earnings release was the fact that Amazon's online sales actually fell 2% in Q4, continuing a pattern stretching back a year. It has been widely reported that Amazon has stopped or stalled a number of planned fulfillment center openings, and it was reported last year that Amazon was actually looking to sublease what is now viewed as excess fulfillment center space. The U.S. Census Bureau keeps track of e-commerce sales, and it says that over the last 4 quarters, starting with Q4 2022, and then the preceding 3 quarters, the data shows what appears decent year-over-year growth, 6.5%, 9.3%, 7.2%, and 6.8%. But in most cases, that is not as fast as overall retail sales growth. The share of e-commerce as a percent of overall retail has remained basically flat since Q4 2022. Much of the growth in both brick-and-mortar and e-commerce in the last year is simply the result of high inflation, with unit volumes flat or down slightly. So what's it all mean? It looks to us like the growth of e-commerce has permanently slowed, as was of course inevitable given the law of large numbers, and the crazy high levels of growth seen in 2020 through mid-2021 as COVID dramatically changed buyer behavior. But does this all mean companies will cut back on investment to support e-fulfillment? Maybe a little, but we believe cycle time and cost pressure will still drive many to deploy new hardware and software despite slowing online sales. That actually could be a factor in the Walmart layoffs. Greater efficiencies in the pick, pack, and ship processes, combined with slower growth, means off shifts and weekend work are no longer needed to get the orders out the door. In fact, Walmart rival Target is continuing to spend big on building out a network of sortation centers, despite its own slowdown in e-commerce volumes, recently noting online customers still require rapid delivery regardless of what is happening at a macro level. In the end, it seems likely a move to highly automated DCs will continue and may actually accelerate, even as the e-commerce growth curve permanently flattens. Softion has many capabilities to support piece-picking processes, including excellent capabilities in the areas of mobile robots and put walls. Visit us at Softion.com to learn more. For Softion, this is Jim Stevens. Thanks for listening.